Hi everyone. Welcome to the Startup Operators Weekly Roundup. I'm Gunjan Saha, and joining me today we have Roshan Cariappa. And this is our 50th edition of the Roundup that we're doing. Roshan, this is a great milestone, but I think that's not the only highlight for the day. A very happy birthday to you as well. How does it feel
Hey,
to
thank
achieve
you
this
so much.
milestone?
Thank you so much. 50 roundups. That's insane, man. That's almost a year of doing these roundups, and it's been a lot of fun, Gunjan. And thank you so much to you guys as well for keeping us company. It's been great.
It's my pleasure. I'm sure you have big plans set for the day.
No, dude. It's just family stuff. Which is great, of course. You can't take anything for granted. Given everything that's happened over the last couple
Right.
of years. So yeah. Thanks so much.
Nice. Welcome. All right, so we have a lot of interesting things to discuss in this week's roundups, right? The government recently published revisions to their FAME subsidies. The startup ecosystem, as always, has been, breaking new records. Karnataka is leading the charge for, setting up India as a global fintech hub. And of course, there's no signs of slowdown in the investor sentiments in the country. But before let's start off with the FAME revisions that the government has proposed, right? Now, for those who are not too aware of the FAME subsidy, this was a policy which the government had implemented to, lower the price of electric two-wheelers as the number of vehicles that were entering the market were rapidly increasing. So in 2019, they had introduced the FAME 2 scheme, which laid down eligibility criteria such as minimum range of 80 kilometers and a minimum top speed of 40 kmph. And also, accordingly, the government was providing subsidies to the manufacturers. Now, the revisions to the government's FAME 2, which is the FAME stands for Faster Adoption and Manufacturing of Electric Vehicles in India, they have resulted in a drastically increased subsidy of electric two-wheelers that meet the scheme's criteria. Now, according to the new amendment, the subsidy increases by 50% to rupees 15,000 per kilowatt hour, and the maximum subsidy is capped at 40% of the vehicle cost. Now, just to put this in perspective, if someone was to go buy an Ather 450X, today in the market, it would cost them rupees 14,500 less as a result of the revision. Now, that's no small amount, right? For a scooter that costs, let's say, 80,000 rupees, almost a 15,000 rupees discount on that, that's massive, right? And this will give a major boost in making EVs more affordable in a country such as India, right? More middle class people will be able to get an EV right now. What do you think of this?
No, for sure. I think the cost of EVs are going to come down, right? And also, this is one of the key things that we have to combat oil imports and stuff like that, right? Just last week we saw that India was planning to sell about 5 million barrels of oil from our stockpiles, which is basically one day's consumption, really, and that's not going to have too much of an impact. And I think we did that just to be pally with the US, right? But policy like this on the EV front is what will really make a difference. And the government has shown a serious intent on this. We've heard, for instance, the Union Minister Nitin Gadkari talk about the EV revolution, saying that the cost of EV will come down to the petrol diesel counterparts in as little as 2 years. In fact, when we spoke to Vivekanand of Bounce, he said it will be even sooner. And they have launched Bounce Infinity, right, where they're offering these swappable batteries, which means that you don't end up paying for the battery outright and rather pay in a subscription format. So all of this put together, I think, you're going to reduce the cost of EV. Also, the infrastructure is coming up. We have the government has said that they're setting up around 600 EV charging points across all the highways by 2023. And Tata Power, for instance, has said that it's already installed about 1,000 stations, and they have a target of achieving around 10,000 station mark, right? So all of this put together, I think it's going to be fairly revolutionary from an EV perspective. And we've spoken about this earlier. These changes, until they become reality, they always seem a little distance away from us in the future, right? And I have my bet on EV. I'll stick my neck out and say within the next 5 years, we will have more EV vehicles, at least in the city. than your conventional vehicles, because it's just an inflection point in terms of cost and accessibility and infrastructure, and I think we're very soon going to bridge that inflection point.
But also, don't you think, since this will be like the first iteration of EV vehicles that will be coming out on the road, people will be a bit skeptical to, shift from gasoline engines to electric vehicles in within 5 years?
Yeah, I mean, see, there's always skepticism when anything new is in the market, right? We've seen this with CNG, for instance, or everything else. But I think enough people are getting on board with this, right? And pretty soon, I think the cost and the efficiency will be too hard to ignore for people. So I think there will be an adoption curve. I'm not expecting 100% of them to immediately shift within the next 1 or 2 years, but I feel in the next 5 to 10 years, I mean, that change will happen. I mean, you will see EVs become mainstream.
Right. All right. So another record-breaking week for the Indian startup ecosystem. Privately held startups have raised $31.2 billion, which is nearly three times of 2020's $11.2 billion fundraise, and more than double the previous record of $13.1 billion in 2019. The number of deals, however, has increased in a less significant way, from 877 deals in 2019 to 930 in 2021. Now, this is data from Venture Intelligence. But considering the disparity between the number of deals that has happened and the total funding, this shows how much the check sizes have increased over the months. In 2021, there has been 40 unicorns from India so far, compared to 26 unicorns in the entire decade prior. Right, the $30 billion mark was crossed when fantasy sports firm Dream Sports raised 840 million from Falcon Edge Capital, DST Global, and others, valuing it at over $8 billion. But we'll be talking more about this in detail later in the roundup. But there has been a lot of skepticism regarding this. The funding boom has resulted in aggressive valuations for unproven business models, and investors are just jostling to fund ideas that which even they don't fully understand or have analyzed, right? And this has created some sort of a bubble, and some of these companies or valuations, may or may not sustain, which may trigger a broader bleak sentiment. So do you think we are seeing another bubble burst? We had the dot-com bubble, we had the financial crisis of 2008. Do you think are we heading somewhere there?
So I'll leave the bubble predictions to the economists and the journalists, right? I mean, I think they're best suited to make these kind of statements. But look, I've always said, capital is going to have its downsides. Obviously, some companies will be overvalued. Obviously, there will be some overly optimistic things being done. But overall, I mean, if you look at it, it's a net. And the still, if you look at it, the amount of VC money that's coming into India is just a fraction of the total amount of VC money that's being spent in the world, right? Considering that we're the second or third largest ecosystem in the world as well. So I feel that this is not a cause for concern in any way, right? And good that growth capital is coming in, right? Because see, that is something that we seriously lacked. We used to have $100-200 million exits earlier, about 5-10 years back. But right now we're seeing funding rounds of 100 million or so, right? I mean, which is phenomenal, which means that, multi-billion-dollar businesses, potential IPOs, and potential generational, decadal businesses are going to be built on the weight of this capital, right? And, literally every roundup we cover different sectors, and every sector, whether it's healthcare or insurance or finance or whatever it is, has so much of headroom to play, right? Which is also being factored in. I mean, okay, you can say that people are overly optimistic, but it'll settle at a healthy median. It won't go to zero for sure. So yeah, I mean, the macro factors have certainly influenced the dollar printing that we're seeing, and plus the sort of a global inflationary environment. All of that, I mean, sure, it'll influence the amount of money that comes into the country, right? For sure. But even aside, I think we're on steady ground in terms of like fundamentals of some of the startups, right? I mean, I think we definitely have problems, mega problems that are worth solving for startups. So yeah, I mean, I always remain optimistic about this, and I'm most optimistic because when I talk to the entrepreneurs of today, and I've spoken to 140 entrepreneurs, at least on the podcast over the last year and a half or so. These folks are so mature. I mean, they're not picking an idea, they're picking a market. and they have precedence in terms of how to build teams, what metrics to chase, when to take funding, and all of those things, which people 5 or 10 years back were extremely naive about. So I'm super bullish about this, and uh, we'll wait and see what happens.
Yeah. But also, I think the entire market is also matured, right? From the first generation of founders that we had seen in the country, they are the ones like so-called Flipkart mafia, as we had discussed in our previous
Yeah,
roundups, right? So I think,
that's a good point. Yeah, that's a good point. See, the thing is that a lot of second order effects have taken place, right? So, which is that Flipkart made a bunch of these people rich enough to start angel investing or start their own companies, and a bunch of other companies will do the same, right? And
right,
these people will again come into the market, and there'll be a lot more innovation. And now, I mean, startups, even as an asset, have become mainstream. You've seen a lot of family offices, a lot of PE funds starting to invest in startups as well. So overall, I think this is definitely a net positive, I would say.
right. So even the government has been really, both from the center and the state level, they have been pushing for a lot of innovation in the startup space, right? Most recently, the Karnataka Digital Economy Mission has set up a fintech task force, which will be led by Harshil Mathur, the founder and CEO of Razorpay. The task group will work towards creating a roadmap for the growth of the industry. They'll be identifying the opportunities and challenges faced by the fintech ecosystem in the state and leverage the partnering institutions and governments to solve them. The task group also includes Timanna Gowda of What's Loan, Nitin Sampath of Cred, Nitin Kamath of Zerodha, Ravish Naresh of Khata Book, Harsh Jain of Grow, and Johnson Tellis, an advisory council member of KDEM. Now, FICCI and BCG estimates that the country's fintech sector is all set to attain a valuation of 150 to 160 billion dollars by 2025. And of course, Bangalore has the highest density of fintech companies in the country. Now, we have been joking that every company in some form or the other has been a fintech company, right? You think, and it's great to see that governments are taking such initiatives. We had spoken what Telangana is doing. We had spoken about what Andhra Pradesh was doing, and now when Karnataka is following suit. So I think these are great signs of what's lying ahead.
For sure, I think it's excellent that governments are being proactive and working with the industry. For long, whenever the governments used to look at certain sectors, people would get scared, right? Because governments meant regulation, and regulation is usually like seen as a blocker to progress and innovation, right? So one could argue that IT in the 90s grew because nobody was really looking, right? And imagine if there was a bunch of policy regulations by babus and so on. I mean, who knows what would have happened. And here we're seeing a complete 180 where the government is trying to encourage this innovation, right? The Karnataka government had earlier also appointed, one of the top investors in the ecosystem, Mr. Prashant Prakash of Axel, as an advisor to the chief minister on strategy and planning, right? So the intent has been pretty consistent on that front. So this is definitely exciting, and given the base of talent that we have in Bangalore and Karnataka, and given the number of startups that we have, I think it's amazing that the government is taking this kind of a stance.
No, I couldn't agree more. And I think such push is also required, right? I mean, without
Yeah.
government support, without the infrastructure support, I
Yeah.
don't think we would have seen scale at this level.
No, and also I think this also adds to that part about competitive federalism in some sense, right? Which is that let the states compete for stuff like this. This is way more healthy and interesting to compete on. Whether it's like IT or and stuff, right? It'll definitely be a net positive for the country if states start doing this.
Right. All right. So in other news, Kunal Shah, who's the founder of Cred, has acquired a non-banking finance company named Parfait Finance and Investment through an entity he has personally floated, named NewTap Technologies Private Limited. Now, this is part of Cred's wider fintech play as they foray out into lending. RBI has already approved the acquisition, but within since its starting days, Cred has built an amazing, a lending book. They have a loan book of rupees 2,000 crore as of August with NPA ratio of less than 1%. It is already offering loans to approved users, but that is for partnership with IDFC First Bank. In August, Cred had also launched Cred Mint to enable users to on-lend to other Cred customers following a tie-up with Liqui Loans, an RBI-registered P2B non-banking lender. And this was really surprising for me. Almost 25 to 30% of all credit card bill payments in India are happening through Cred, and there are more than 2,000 commerce brands that are set up in its stores. But 25 to 30% of all credit card payments in India happening on the platform. I mean, that's massive, right?
Yeah, I mean, there are not a lot of credit cards in India to begin with, but yeah, 25% of that is definitely a significant number. Look, people dump on Cred's business model or the lack of one, and they keep saying these things. But I feel that, and I've said this before, that we're at the stage zero of Cred evolution, right? I think stage zero was building a community of these high net worth individuals or relatively high net worth individuals with good credit scores and so on. And I think the stage 2, stage 3 is what we're going to be seeing right now, which is providing a wide bunch of financial services. They've already launched this P2P lending, which has become a pretty big thing, right? I mean, it's become a pretty big hit in some sense. So they will keep stacking these services, and to that end, I mean, they will require all the banking licenses, and they need to be compliant, and they need to be what do you say? They need to be they need to have the regulation and everything in place, right, to start acting like a bank. So that is what you will start seeing with many of the fintechs, not just Cred, right? We spoke about Bharat Pay and PMC. I mean, similar things will start happening. I think a couple of the banks are also pending to be privatized in this winter session. I think a couple of national banks, if I'm not mistaken. Who knows? Maybe, I mean, one of these folks will probably acquire a large bank, and you will see a hybrid mix of all of the technology type of services as a front end to a legacy banking institution, right?
Right.
Definitely interesting times ahead, and yeah, let's see what happens.
Yeah, I mean, look at what companies like Jupiter, companies like Slice, look at what these companies are doing. Right? They're partnering with, I think, smaller banks like RBL Bank, South Indian Bank, and stuff, and they're bringing their services to the customer using their tech platform, right? Which is very simple to use.
Yeah.
They're gathering the data.
But see, what happens when you partner? What happens when you partner is your margin gets cut, right? So that's a concern. So which is why, I mean, most of these folks are also interested in buying out some of these NBFCs, get these lending licenses and so on. So they have a wider spread on the margins. Yeah, and given how credit starved India is, any of these things are a net positive. So yeah. On that note, I mean, I myself downloaded this Uni Pay 1/3 card last week. I mean, I'm yet to use it, but it definitely seems interesting.
Yep. All right. So Loom Ventures had announced on Wednesday that it has raised $105 million in the first close of its fourth round, which is less than 2 years after finalizing its previous round. The 11-year-old firm, which is one of the largest Indian venture funds, said that it expects its new fund to balloon to close to $200 million by March next year, which is when it hopes to close the final round. With the new round, the investment firm will continue to focus on backing early stage startups in their pre-seed and pre-series A rounds. Now, some of the notable portfolio companies include online learning platform Unacademy, fintech company Slice, hyperlocal delivery service Dunzo, edtech Class Plus, and used cars marketplace Spinny, and insurtech Turtlemint among its portfolio startups. Now, that's a stellar lineup, right? I mean, we have been covering all of these companies on the roundup on a regular basis. But also, Indian startups are raising record amounts of capital. Sequoia Capital, Tiger Global, Falcon Edge, and SoftBank has increased the pace of their investments in India in recent quarters as they double down on finding winners in one of the fastest growing growth markets. So, with this sentiment and with this pace, do you think 2022 will break all the records that we're setting in 2021?
Yeah, for sure. We saw Prime Venture Partners also raise a fund, right? And who else was it? I think, was it Stellaris? I think Stellaris also raised a fund, right?
Yeah.
So good, man. I mean, all these are like folks who've been in the ecosystem for 10, 15 years. The Bloom gang is the OG for sure. They've been around for a while, and look at that portfolio of startups, right? Everything from Unacademy to Spinny to they also have a bunch of SaaS startups. I mean, they invested in Exotel way back in the day, I think. probably a 3 or 4 million Series A that they did, right? And they've backed the startup all through. There's one podcast of Karthik Reddy of Loom Ventures with Jivraj on the Indian Silicon Valley podcast that I encourage everyone to check out. It's a fantastic episode, right, where Karthik talks about, you know, how they've built the fund out itself and what are some of the differentiators they bring on the table. See, one of the things is that, you know, we keep saying capital gets commoditized, and sure, I mean, to an extent it's true. But you know, it's all the other stuff around the capital, right? The institutional knowledge that the VCs have built up, the, you know, the connections and the help that they can offer in terms of really scaling the business, all of that, right? I mean, that really comes to the fore, and that's what is important. And you know, Bloom Ventures certainly has a lot in that sense, right? So kudos to the team, and you know, wishing them all the best for the future.
All right, so next, Dream Sports 11 has raised funding of $840 million at a valuation of $8 billion. New and existing investors led the round, including Falcon Edge, DST Global, D1 Capital, Tiger Global, and Redbird Capital. TPG and Footpath Ventures also participated in the round. Now, the company has diversified its offerings in recent years to not only cover sports, but all the technology products and services that come along with it. It recently committed $50 million to in-house sports content and commerce platform called FanCode in a broader push to become the one-stop destination for sports. Dream Sports also introduced payment solutions through DreamPay, launched an accelerator called DreamX, and operates DreamSetGo, a sports experiential company. Harsh Jain, who is a co-founder and CEO, also said that the company will focus on creating a thriving sports ecosystem that goes beyond fantasy gaming. Now, we have seen the rise of fantasy sports in India, right? Thanks to IPL, ISL, and all the various tournaments that have been taking place. And Dream Sports themselves have seen tremendous scale in the past 2 years. What do you make of this?
Yeah, it's amazing, you know, 840 million. Wow, that's
Close
heck
to
of
a
a lot
billion
of
dollars.
cash, right? I mean, seriously. Imagine, I mean, if you were to fit all of this in trucks or something. It's yeah, it's pretty crazy, man. And you know, we've spoken about MPL, Dream 11, and so on. And gaming is a hard business, you know. And within that, I think to be able to really succeed, it takes a lot of trial and error. And you know, I think Dream 11 at this point of time functions as a studio, if I'm not mistaken, right? I mean, they have creators on their platform, and also they've become so much more than just gaming itself, with sports merchandise and everything. uh, uh, they also sponsor IPL, right? If I, is that right?
Yeah.
Yeah, so
Yes.
they also sponsor IPL as well. So there's a lot of regulatory problems on this front, right? I mean, I think recently we saw the Karnataka government or the police, I think, that had
It
taken
filed an
action.
FIR. Correct.
Yeah,
But I
they
think
filed an FIR and so on, right? So there's a bit of concern on that front, and I think, you know, I hope at least that the government comes out and clarifies these things. But apart from that, I mean, if you've seen the, you know, what Jio has done for mobile internet in India, right? 600 million internet users, going to around 900 by 2025. If you look at you know, the amount of internet that we're consuming on a per month basis, the highest in the world, the cheapest data costs, all that put together, you know, education, internet, I mean, education, gaming, insights, all of these things will become front and center. And man, there's a lot of money at stake, right? Because of the numbers itself. So yeah, it'll be interesting to see this.
right on that, the ban which Karnataka police had filed for, I think the High Court has passed an extended stay on that order. So I think that gives enough time for these sporting companies to actually come out with a plan or figure out some alternate solution as to like how to proceed forward.
Yeah, I guess they'll figure it out.
Yeah. All right. Some of the other noticeable deals from last week include the ones by NoBroker and Go Quick House. NoBroker had raised $210 million in a funding round led by General Atlantic, Tiger Global Management, and More Strategic Ventures. The capital raising was at a post money valuation of $1.01 billion, making NoBroker India's first property tech unicorn startup in the country. NoBroker's latest valuation is a 2.5x jump from last year when it had raised $30 million at a valuation of 400 million. Go Quickhouse is an e-commerce enablement firm, and they raised a Series A funding of rupees 112 crores or $15 million, and this was led by Sequoia Capital. The round also saw participation from existing investors, Matrix Partners India, and RTP Global. The new investment will be primarily used for doubling the size of the product and tech teams and hiring best in class talent and subject matter experts to enable the development of innovative products to increase conversion rates. And yeah, I think I know personally I've been using NoBroker in the society and Go Quick has. I mean, Roshan, any word from your side on either of these?
No, man. I mean, I haven't really had a chance to, look at it. No broker, I know. I mean, way back when they got into real trouble with all of the real estate uncles in Bangalore, right? I mean, there was a lot of chaos at their offices and everything. It's good to see that they've thrived despite all of that. So yeah, e-commerce enablement seems interesting. So yeah.
Right. So very interesting tweet Wembu sir had put out, right? The tweet states Chennai experienced massive floods in 2015 and then totally ran out of groundwater 4 years later. Venture capital operates the same way. Right now, there's a massive flood of VC hitting India, but small pools of long term capital are like ponds and lakes. We vitally need them. I think I should let this sink in for a while, right?
No, that's an amazing analogy. That's an amazing analogy. I think there will be patient capital, man. I mean, I think VC firms also, right? I mean, if you look at how Sequoia, for instance, has restructured their holding entity and stuff, right? I mean, people do realize that the typical VC model of selling or exiting in 8 years doesn't really work right now. I think if you have a winner, I think people double down way beyond IPO itself, right? If you look at IPOs that happened in the US, so in 2020 and so on, a lot of the large firms that exited, I mean, would have made plenty more if they had held on, right? You can argue that okay, the market cycle is favorable, and that's why we are seeing these and so on. But I also think that some of these new technology innovations like EV and so on, right? I mean, these are going to create multi-billion-dollar businesses, markets itself that we haven't really factored yet. I mean, it's impossible to say how big they will become at this point of time, right? Look at cloud, for instance. None of them would have said that cloud would be so big, and today, even like a niche market in cloud is worth a few tens or if not hundreds of billions of dollars. So yeah, I think people do realize the need to get patient. But yeah, Wembusser's point is well taken that there's a lot of optimism, there's a lot of capital right now, and we may not always see this kind of situation going forward in the future. And entrepreneurs have to be mindful of the fact that they have to build for sustainability and they have to build for the long haul.
Right. All right, let's talk about some of the conversations that you have lined up for the next week, right? You'll be speaking with Raghunandan of Zolve and Alok Goel of Stellaris Venture Partners, right? Anything that you have planned out for them?
We've spoken plenty about open banking and fintech and neobanks and so on, right? And I think Zolve is a very interesting fintech company, and I'm certainly interested to talk to Raghunandan. He's an experienced person about how they're executing. So that will be an interesting conversation. Alok is an old-time VC. Stellaris has been around for, as I mentioned, around 10 plus years, I suppose. And he has seen the ecosystem evolve in that time. Again, it should be an interesting conversation. I've not spoken to, we've not had an investor on the podcast in a long time, I would say, maybe 30, 40 episodes back. I think the last one was Adit of Gemba, right? So it'll be interesting to talk to Alok. And yeah, if you guys have any questions, do shoot them on our social channels. Be happy to pick it up.
Right. All right, so I think with that, we come to the end of our 50th Startup Operators Weekly Roundup. Folks, thank you so much for joining us and for constantly sharing your support with us, your feedback and everything, which helps us, improve every episode that we put out. I don't think we would have achieved this milestone without your support. So thanks so much. Do check out our WhatsApp group where we have regular discussions and share amazing insights from every episode that we put out. You can find the subscription link, which is for free, on the description of this video as well as the episode on your favorite podcast platform. Also, don't forget to check us out on LinkedIn and Twitter. Our social handles are the Startup Operator on LinkedIn and at Operator Startup on Twitter. And yeah, I hope you enjoyed this episode and we look forward to catching up with you again next Sunday. Thanks, everyone. Thanks, Roshan.
Thanks, guys. See you, everyone.